The following is a sponsored program paid for by First Alliance Credit Union. Welcome to Good Money Moves, featuring Jenna Taubel from First Alliance Credit Union and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
It is time for Good Money Moves. I'm Andy Brownell with Jenna Taubel, Director of Brand and Digital Member Experience with First Alliance Credit Union. How are you doing, Jenna?
I'm great. How are you?
Well, I feel like super accomplished after completing 200 episodes of this podcast.
Yeah, that was a huge milestone for us.
So that's what we talked about last week, looking back over some of our past 200 programs. Mm-hmm. What are we going to talk about today for Good Money Moves?
Yeah, so today I wanted to talk about a topic that has a lot of people starting to feel a little bit worried, and that is that student loan payments are going to be starting back up again.
Yeah.
So many of you are probably aware that during the COVID pandemic, the Department of Education put a pause on people needing to repay their student loans. And the purpose behind this was really to help those borrowers who were struggling financially due to the pandemic, right? Whether it was layoffs or reduced hours or whatever the situation might have been. But now that the pandemic is over, thankfully, those student loan payments are now scheduled to begin again coming up in October here. And this really has a lot of borrowers worried, and understandably, right? Student loan payments can really take a really large chunk of your paycheck. And since the pandemic, almost everything has just gotten more expensive, including groceries, gasoline, rent, home prices if you've bought a home, right? So unfortunately, there's not a lot you can do about these payments returning. What you can do, though, is make sure that you are prepared to start paying your loans when they resume.
Yes. Have it incorporated into your budget again. I imagine with this much time passed, a lot of folks just more or less got used to having that extra little cushion available, even after the economy picked up post-pandemic.
Yeah.
Yeah. And I imagine we're going to be talking about how perhaps they can find a way to not struggle too much to make those payments and get things back on track. So where do we start?
Yeah. So if you've got student loans that are going to need to start being repaid again, the first thing that you can do, and I would recommend it, is to really contact your student loan servicer. Right. So I don't know if you know this, but the Department of Education actually uses outside companies to handle the billing and payments of your loans. And there's essentially a middleman between the Department of Education and you. And currently those student loan servicers are Great Lakes Educational Loan Services, Ed Financial, MOH, ELA, Advantage, Nelnet, ALSLA Servicing, and ECSI.
Don't quiz me on those later.
No. I will not. It's a long list, but so the first step, and do this before your repayments resume, right? So you'll want to contact your provider to make sure that they have your current information and contact information. Especially if you've moved or changed addresses, or if you got married, or if any of your information has changed, make sure you reach out to them. So make sure that they have your most current information. And then you may also have to update your income information with them as well. And that's an important step because there are different programs that are income-based repayment programs in some cases. And we'll get to that a little bit later in the show here. But you're also going to want to just look over the details of your student loan, especially if you haven't in a while, just to make sure you do remember and understand, what the term is, what you owe, what your payment's going to be, how soon you'll have it paid off if you're making full payments. And by doing this, you're just ensuring that there won't be any communication issues once your loan payments start back up again, right? Because your student loan servicer will be able to get in touch with you if there's any issues with your account. You'll be able to get any issues with your account resolved more efficiently since you won't have to have spent time like updating all your information after the fact if something happens. And if someone doesn't know, right, who their student loan servicer is, the best way to do that is you can go to studentaid.gov and you can log into your dashboard that you should have, and it will tell you who your student loan servicer is in your dashboard.
So if you don't have a dashboard, that's the first thing you need to do.
Yes.
But you should have one, right? If you have the loan,
yes, if
obviously
you've got the
should have
loan, you would have yes, correct.
Okay. What's the next step we should be taking if you have a student loan payments coming back down the line here in the next month?
Yeah, so the next step then is to select that monthly repayment plan that's going to work best for you. And you'll know this right after having spoken with your servicer, what your options are, right? So there's a variety of repayment plans for borrowers out there. And you can review all of the plans again at that studentaid.gov website. And you can also talk with a representative from your student loan servicer about the options that you have. And this is a good step to take even if you haven't had issues with your repayment plan in the past. For instance, the REPAYE, REPAPE plan has updated information around that. There's now called the SAVE plan, Savings on a Valuable Education. That's what that stands for.
Okay.
And according to the Department of Education, you may be able to actually substantially lower your monthly payments with that plan. Obviously, there's going to be qualifications for all of these different plans, and we're not going to dig into those today. That's definitely something to go over with the student loan servicer or by visiting that website I mentioned earlier. And interestingly enough, so that Department of Education site also does have a loan simulator on their website that you can use, so you can kind of plug in your numbers and start to explore some of the different repayment plan options that might be available to you, including that SAVE plan that we just talked about.
I wonder if that's somebody's job to figure out these little acronyms that they always use, make them match up with whatever the subject matter is.
Yeah.
That's a pretty good one. I like SAVE. That works. Yeah. I imagine I could figure out what REPAYE, but some of the acronyms earlier from the servicers, they're awkward to say the least.
Yes.
And I imagine as well, seeing as we're heading towards this next month, the sooner the better, because I have a feeling that the call centers and chat room communication protocols will get really, really busy.
Yes. The sooner you can get ahead of this, the better, for sure.
Okay. So getting on there, doing this, get everything updated, that'll be a big help as your student loans resume. And my information is now up to date, and I've selected the repayment plan to see what I'm eligible for. What happens next?
Yeah, so this is where you have to figure out where you're going to be getting the money to make your monthly payments again. Yes.
The meat of the problem. Yeah.
Yeah. This is arguably the hardest part of preparing to start repaying on those loans again, right? A recent statistic for you, the Experian, a credit reporting agency, states that the average monthly student loan payment is just over $200 a month, which that's a pretty big portion of people's paychecks. And that's just the average, meaning there's many people who pay more than that.
Much more. Yeah.
Yes. And there's really no way to get around the fact that making your student loan payment each month is not going to feel good again. But the good news is that if you have kind of that monthly budget, that monthly spending plan in place and you're prepared for it, it's going to lessen that pain a little bit because you're going to be prepared for it. So the first thing that you'll want to do is really just go through your budget, note which categories, right, you won't be able to reduce, right? Your mortgage can't probably reduce that. Rent probably can't reduce that. Utilities, groceries are going to be pretty consistent. You might be able to make a few tweaks here and there, but for the most part, they're going to be pretty consistent amounts, right? So once you kind of know what budget categories you can't touch or make much movement on, then start going through your budget categories that you think that you can reduce to maybe make room in your budget again. And these are usually what are called your discretionary expenses. So things like spending money going out to eat or extra clothing or entertainment, things like that, that you can kind of move some money around to make room to make that payment again. And you can prioritize really any of your budget categories where you don't spend that full amount each month and help reduce the impact of that added expense from your day-to-day life. So it's going to take some reprioritization of where you're spending your money.
But it is like free money if you have that one category where you've been consistently spending less than you had budgeted or planned. Yeah. That's the low-hanging fruit right there.
Yes, absolutely.
And I remember when they first suspended the payments, you and I had the conversation that if you were able to just continue making those payments to yourself.
Yes.
That would be the best of all worlds.
Yeah, because then you could take that money and put it towards those loans now and really make a nice big dent. And your budget will have been used to those payments continuing.
You'd have zero impact on your. But if you did not follow that advice, this is all great advice, and we'll continue with more of it. But how to handle this whole situation as your student loan payments resume in October with Good Money Moves. Jenna Taubel with First Alliance Credit Union. I'm Andy Brownell on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. We're talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340, KROC AM and 96.9 FM.
Welcome back to Good Money Moves. Jenna Taubel with First Alliance Credit Union. I'm Andy Brownell, and the topic today has been the resumption of student loan payments and how to minimize its impact on your financial life. I don't think you can minimize it too much, but you can try to help, right? And earlier, when we started out, you were talking about inflation.
Yeah.
How much? I mean, it really was. It was tied in with the pandemic. That's when we saw inflation rear its ugly head again. Yeah. And we've seen everything go up in price, gasoline and food and just about everything that we have to pay for.
Yes.
And I guess if you're looking through your budget and things are tight because of inflation, what if you just can't afford to make these payments anymore?
Yeah. So, and that could be a very real possibility for a lot of people. And if you truly can't afford your student loan payments when they resume, the first thing you really need to do is reach out to your student loan provider and let them know the situation. They can then let you know what your options are. And again, these can include, maybe changing your repayment plan if you haven't before. There could be options for consolidating some of your federal loans to try to lower your monthly payment in some cases. And again, there's several different programs that you may or may not qualify for depending on your situation and the types of loans that you have. As a last resort, you can also potentially get some short-term relief in the form of like a deferment or a forbearance. Let's say you are just off of work for now, but you anticipate working again soon for whatever reason. Those could be good options to ask about. If you've had like a qualifying event like being unemployed or being enrolled at least half time in school, you can apply for a deferment, and then that interest won't accrue on any subsidized loans or Perkins loans that you might hold, but it will accrue on other types of loans.
Okay.
Yeah, again, we're not going to delve deep into the different types of student loans today. That's a whole nother podcast. But again, depending on what types of loans you have and what your situation is, you may be able to use some of these different options or programs to kind of help rework your payment structure in a variety of ways. That being said, you don't need a qualifying event for a forbearance, but they do only last for up to 12 months at a time, and your interest will accrue on all of your loans during that time.
Okay.
So you may not have to make payments, but the interest is still going to rack up, and it racks up very quickly. Essentially, though, both of those options will essentially just postpone your student loan payments, but neither is really a good long-term solution. It can buy you some time if you're trying to get your house in order, or maybe you're just in between jobs, or like I said, maybe you got laid off and just haven't found another career yet, whatever that case may be. There are some short-term solutions that can help you. But essentially, again, what they'll do is they'll give you that space you need so you can kind of figure out how you can free up some more of your money each month or bring in some more income if that's what you need to do. So again, talking to that, your loan provider is key here.
That's one thing with the student loans. They're going to get your payment someday.
Yes.
You may delay it a little bit, but that means it just adds one more year to the term of the loan.
Yes.
Yeah, that's not a great option either.
No.
Okay, so once you figure this part out and you know how you're going to make the payments, where the funds are coming from, are there any additional steps we should be taking?
Yeah, so I think there's a couple additional pieces of advice for student loan borrowers. First, set up automatic payments if you can. If you can pay your student loan with automatic payments, you will qualify for 0.25% taken off of your interest rate. And now that may not seem like a lot, but I want you to, think about it this way. So the University of Minnesota estimates that the average cost per year of in-state resident tuition is around $33,000 for the year.
Oh, gosh.
That means a 4-year degree will cost you about $130,000. So if you take out a loan for that entire amount, right, 0.25% of interest amounts to about $330 a year. And since student loans take an average of 20 years to pay off, you're essentially saving yourself $6,600 on your loan just by setting up automatic payments. Now, granted, everyone will have a different situation, but the point is, don't underestimate how much you can save just with that reduction of an interest rate for doing something very simple like setting up those automatic payments.
$6,600 over 20 years.
Mm-hmm.
Yeah.
That's a vacation.
Exactly. Well, yeah. It might be a couple for me. I'm so cheap. The other aspect of I was thinking of is people have changed careers during this pandemic.
Oh, big time.
And some people are now working for organizations that are considered nonprofits.
Yes.
And they might be able to explore the possibility of having partial loan forgiveness under these new programs that have popped up.
Exactly. Yeah, exactly. There's been, and you make a really good point, Andy. There was major shifts in people's careers throughout the pandemic for various reasons. And, again, that can qualify you or disqualify you in some cases for certain programs. So that's, again, why it's so important, especially if you've had major life changes since those payments stopped, that you're talking with your student loan servicer as soon as possible so that you can start to vet out, what are my options here? Because at this point in time, you don't have a choice not to make the payments.
Right.
So
that's not an option. But I know some people aren't even aware that they are working for a nonprofit because let's say a lot of these healthcare providers are nonprofit organizations.
Yeah.
And I'm sure there's caveats as to whether or not they qualify for these programs, but it's at least worth the question.
Yeah, absolutely. And even certain service type careers in education qualify for certain programs as well. So definitely take a look at what your options are if you haven't.
Okay, we'll take a break and continue our discussions about student loan payments and the resumption of those loan payments. It affects a very close family member of mine, so I hear about it all of the time. Trust me. That's coming up next. We'll be back in a moment with more Good Money Moves on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. We're talking good money moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
Welcome back. Good money moves. Jenna Taubel with First Alliance Credit Union. I'm Andy Brownell, and the topic this week has been the resumption of student loan payments. We've covered a lot, but are there any final tips you want to mention about the student loan payments coming due again?
Yeah. I think the last thing to really remember to do is keep good records, right? Make sure you take time to read any mail or email messages that are coming from your student loan servicer, and that you are keeping those communications for future reference if need be, that you're not just ignoring them or tossing them aside. And if you do get the opportunity to talk on the phone with a representative, that you're taking notes about what they're instructing you to do, what your options are. And you're going to want to have these notes, because if a mistake happens, and they do happen more frequently than they should, on either your end or the servicer's end, it could end up costing you a lot of money and a lot of time. So you want to take time to make sure that you know exactly what the status of your loan is, what the requirements of your repayment plan are, and that if there have been any changes made, what those are and when those are being made, and what documentation you need to provide on how frequently you need to provide that. And it's also going to be very useful to have that documentation if you think your servicer did make a mistake, that you've got clear records of what conversations were had, and at what points in time, and what you were instructed to do and not do.
And who or whom you were speaking with.
Yes, who you spoke with on what day. Yep.
From experience, it wasn't a student loan, but it was a different loan I had. And I had kept those notes, and I had talked to a loan officer, and I got the name and the date and the time and what the conversation was about, because it was important. And a year later, all of a sudden, I was being sent into collections. So I contacted, and I said, what is going on here? Oh, you didn't do this, this, and this. I go, well, according to my notes, this conversation on this person, and I was able to straighten it out.
Oh, good.
Everything got fixed.
Yeah.
Because I did have that information. And without that information, it would have been some guy told me. Yep.
Yeah. And that's a great point, Andy. I mean, yes, it's very important for your student loan program, but any type of conversation you have where your financiers are involved, it's always good to have records of the conversations you've had and with whom and what the outcomes were. Absolutely.
Yep. It may seem like a little bit of a pain in the neck, but
yeah.
And then nowadays with the smartphones, just jot it down in your notes in your smartphone and you'll have it with you.
Yeah, exactly. Easy.
Yeah, just don't change smartphones.
Or back your stuff up to the cloud.
Yeah, back up. Okay. Well, great information as always on Good Money Moves. But of course, I'm sure, especially with the student loan programs, there is so much out there that we couldn't even remotely touch in a half-hour program.
Yes.
Jenna, I imagine you have some information on where we could learn more.
Yeah, absolutely. You can visit our website, firstalliancecu.com. We've talked about paying back your loans on our blog and how to find money when your budget's tight. All kinds of great financial tips and advice that we release every week on our blog. Plus, you can go back and listen to past episodes of this show at firstalliancecu.com/podcast or on krocnews.com. You can subscribe to Good Money Moves on Apple, Google, and Spotify podcasts. Of course, if you love our show, please leave us a review on your favorite podcasting platform. Of course, if you have a financial topic you would like us to cover or questions you'd like answered on Good Money Moves, please send me an email at marketing@firstalliancecu.com. And of course, I strongly encourage you to reach out to our team at First Alliance Credit Union. They are here to help you start making good money moves today.
That's First Alliance Credit Union, federally insured by NCUA and an equal housing lender. And once again, reiterate, talk to a team member. Some of the things we talked about today, I imagine they can help with some of those questions, or at least point you towards that dashboard or whatever it is you need to be able to do for
Yeah,
these
they
student
can,
loans.
yeah, or even just help you figure out that budget, right? To kind of help you figure out
Yeah,
where you're at. That absolutely,
find the
absolutely.
low-hanging fruit that you can hack
Hmm.
off.
Yeah, exactly.
All right. Well, Jenna, we'll talk again next week with another episode of Good Money Moves. Thank you so much.
Of course.
And of course, this is Good Money Moves on News Talk 1340, KROC AM, and 96.9 FM.